We're done with those midweek holidays, at least for now. And we're coming back after S&P's longest gaining streak since November 2004. It's managed to pare losses incurred since April 2nd, which was the tariff announcement. And global markets are cheery. Even on Friday, although it was a volatile session and for the better part of last week, we also largely consolidated and were range bound. We did quite okay. You know, the fact that we've made it back to those 80,500 levels on the Sensex, the Nifty as well circling around the 24,500 print as of today. So it's not looking bad. And I think the biggest tailwind is the fact that US crude has fallen a good 4%. It's going to act as a big tailwind for us.
You know, everybody talks about May cyclicality, etc., etc. What is the big difference between April and May according to you?
Crude.
Holidays.
Holidays, okay.
It's back to that
brutal... Yeah, that's what I said. It's done now.
It's back to the brutal reality.
It stopped with last week, yeah.
You know, just May...
Now it's only 15th August.
I know, can you imagine? This is time you need your summer holidays, the maximum. Whoever plans this calendar has to be planned better.
We're not in school anymore.
No, holidays are always welcome. Yeah. School or work doesn't matter. True. So the point you could ask yourself is that, will the month of May be different? Historically, you have this good old, Wall Street adage, in the month of May, sell and go away. Do you sell in the month of May? Or do you stay still in the month of May? Or you buy in the month of May? So let's keep buying aside. These are not the levels you buy. But do you stay still or do you sell? I think stay still, don't sell. You are going through what could be called as a real, surprise patch of strength, at least in global markets, where all the losses which had happened after the tariff kicked in for US markets, which is where the change is going to be highest, they in a sense have got erased off. So the strength, I think, has been nothing short of breathtaking, at least in that part of the world. Adding to that, and frankly what's happening, Aisha, is interesting that if you look at the reflation trade or the comeback trade, crude has not come back. Dollar has not come back. It's only equity markets which have made a comeback. So for our market, logically, global equity strength is always good news. Numbness or drop in crude is excellent news. And no uptick in dollar index is fantastic news.
And so, the FI buying also.
And the FI buying.
Yeah.
So while we may look at the market last week and say, oh, we did nothing special. Are we reaching that air pocket or the thin air where, we could hit a pause? Maybe. But the setting on the table is favorable for a market like India. Crude, flows, equity market strength, decline in dollar and drop in commodity prices.
Oh yeah, absolutely. And here's what's happened when OPEC Plus met over the weekend. They are looking to increase oil production in the month of June. Healthy pause or rather healthy fundamentals are now reflecting lower oil inventories. They may be pausing or reversing depending on market conditions. That's where their commentary has been. And they're looking to support stability and compensate for overproduction as well. So net result, you've seen a big spiral down in crude prices, and that definitely augurs very well for our markets. But let's talk about what's been happening in our markets and what the internals are looking like. While yes, it was a little bit of a range-bound week last one, but the FI buying continues. Nifty did manage to hit its yearly highs. Year to date, it's been outperforming, so we've out completely over there. The mid caps as well as the realty and auto indexes, they've been on a gaining spree now for a third consecutive week. But yeah, the declines continue, and that's only in the FMCG pocket. Of course, May seasonality, is it going to trigger or not? That we just talked about, that perhaps lying still is what's best in this particular market. But let's talk about the Buffett AGM. And finally, the big man has sort of hung up his boots.
Yeah, the more I will say, the less it is. I mean, he is arguably world's most famous and world's most loved investor. What he, in a sense, has brought to the table in terms of giving a different definition to equity investing, I guess there is no parallel for it. At 92, I saw that Berkshire Hathaway AGM, and he actually spoke for 6 hours, relentlessly answered all the questions. He has the spirit, the zeal, the commitment to really make a comeback. His entire approach to investing is simple, think long term, count your time horizon not in terms of days, months or years, but in terms of decades. And what he's ensured, Aisha, that the leadership, I guess, of Berkshire Hathaway is intact, which means the baton for the first time in Berkshire Hathaway would be passed on to a professional management. You know, it was Charlie and Buffett, and then from Charlie was the vice chairman, Buffett is the chairman, now the baton gets passed on. And it is going to be happening in a rather smooth manner. Everybody will miss him, but nobody will object to him. You know, it's all I can say is that long live Warren Buffett. You want to see him on the AGMs, you want to learn from his wisdom, you want to see that, you know, how he keeps it very simple. And it's not about investing, you know, Aisha, it's about the human being and the extraordinary human being he is. The more I hear him, the more I see him, the more I watch him, I guess there is a purpose with which you're born on this planet, and Buffett has really ensured that that purpose in a sense is fulfilled in whatever life he's lived.
At 94, one can say that he's a living legend, isn't he? But yes, Greg Abel takes over from the vice chairman's post. Now he's going to be heading Berkshire. So the crown has now been given to him. But, you know, here's the key takeaways and, you know, talking about what's really happening in the environment, what's the global setup looking like. Warren Buffett did say that US is operating at a fiscal deficit that is unsustainable. So he did acknowledge that fact. Said that it's, however, a shining example of capitalism, like a cathedral attached to a casino, he says. Having said that, he said there is no intention to sell any stake, will be given away. He said that Berkshire will not put its money in things deemed stupid as of now. He said probably won't sell the Japanese trading houses in the next 50 years. And he said invest in forever businesses. And that's what they've done so beautifully, actually, right? I mean, everything from a Apple to a Coca-Cola, forever companies. Stay put with them.
Yeah, I mean, some of his forever investments, you have to take the clock back and say that, okay, Berkshire has been operating from mid-50s and we are in 2025, which are some of his forever investments. For that, I think it really has been Coca-Cola, which we all famously know, then it was American Express, then to some extent it was some of the banks, it was S&P. So there are some of the forever investments because he follows a simple philosophy that you have to become, when you own a piece of business, you are a partner, and when you're a partner, you have to think in terms of not renting a stock but marrying a management. So the management has to be good. You need to understand what you do. You really need to take a long-term bet, give management a long rope, and as long as the management is looking at creating shareholder value, I guess the minority shareholders in this case really would be, you know, important. On having said that, you know, Aisha, that why are you sitting on that kind of an cash? And
yeah, the cash pile is up quite significantly, actually, from $334 billion. It's now at 347, actually almost touching 348.
Yeah, so the way to look at it is that one is the absolute number. As you will grow older, the number will always grow. So as the Berkshire's size is growing, the cash pile will grow. But as percentage of the total asset, which is what is important, I guess the cash number is historically high, and which I guess is also a clear indication of what he's thinking right now. Look, it's very simple. They feel that in investing, you get great opportunities are available very rare, and that's the time you really need to be prepared. And I think that's the messaging. So I don't think you should judge by looking at the cash pile of Warren Buffett because their time horizon, their approach, their access to capital, all that is different. That does not mean you cancel your SIPs. That does not mean that Berkshire Hathaway is bearish. It's just that they are not finding enough opportunity. And I think I'll leave it there.
If you like this video, then like, share and subscribe to ET Now.